And we are live. Give me a second here. Uh, 1 second here. So I'm going to get started at the 3 minute mark to give a chance to share this out. As you come in, hit the like button. We're going to do a live podcast, right? Come in. Just come in, hit the like button, hit the share button. We're going to get started at the 3 minute mark. Come in and say hi, all of the great stuff. All right. 1 second. Skip. All right. All righty. Make sure. So we're going to get started at the 3 minute mark. We're going to talk about when invest. I was going to do this episode. I originally had this episode planned for Halloween time frame, but I decided to do it now. So 1 second here. Page manage. So I'm sharing this out. Come in, hit the like button. Share this out as well. If you can. Not the like button, I meant the thumbs up button. 1 second here. One second. So people that are coming in, I am currently posting this up on our Facebook pages, The Investor Show, Royal Financial Investment Group. So here we go. Let's put it up on my Pinterest as well, huh? I'm not connected to my Pinterest, so. All right. Sorry, so we're getting close to 3 minute mark. So let's go ahead and get this started. Hey to everybody out there that's checking in, that's catching this live from wherever you may be logging in tonight. But we're going to do a actual podcast on when investing becomes scary. So let's kick it off. Once again, ladies and gentlemen, boys and girls and children of all ages, you are now tuned in to the Investor Show. I'm your gracious host, the Prince of Investing, coming to you guys and girls live from the beautiful state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. Check out the description box to check all the great stuff we're doing around the globe. But as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time. So let's jump straight into it. So as you guys and girls can see in the description box, today's topic is going to be about when investing becomes scary. And this was supposed to be a Halloween episode of the show, but I didn't get a chance to do it. I've been moving around doing things and studying in school and stuff like that. But it kind of spins off the latest book that I'm reading. The latest book that I'm reading is Security Analysis by the 6th edition of Security Analysis by Benjamin Graham. Oh, what's the David God, something like that. I can't remember. But it's by Benjamin Graham, right? And the first original thing was written in the 30s, right? And give me 1 second. I want to show you guys the book, you guys and girls the book for the people that are catching this live and that are catching the playback on YouTube, Facebook, all the good stuff like that. So the people that's catching the playback on audio, give me 1 second so I can go get the book. I want to show it, the exact book to you guys and girls. All right, 1 second. All right, so here we go. So here is the book. As you can see, my page mark is not that far in, but it's a pretty thick book, right? Here it is. Security Analysis. This is the latest book that I'm reading. And it's an old book. The original one was written in the 1930s. I think it was right after the Great Depression, right? And the thing I liked about the book, and my two latest books have been this book here, and my other book is The Market Crash of 1929, which was the greatest market crash of all times, right? So the reason why I'm studying this is I believe history will repeat itself. And hold on, let me say this to Tony Siri. He says he's from Cleveland. We got Cleveland in the building. If you're catching this live, drop where you're from, right? We got D Brooks. What's going on? I want to get all your books about investing, credit, and life. Oh, man. Yes, D Brooks, I definitely appreciate that. The book series. And also what I'm going to do. Huntsville, Alabama in the house. So we got Alabama and we got Cleveland. So for people out there that want to catch my books, I have a children's book series. You know what? I got it on me now. These are it. I think, here we go. So here the book series. This is my first book from 2015, Wesley Learns to Invest. Second book from 2017, Wesley Learns About Credit, hardcover. Very good quality here. Hardcover. And my latest book, Wesley Learns About Insurance, featuring NFL Hall of Famer Terrell Davis. So that's the third book. These are the hardcover. They're available hardcover. They're available paperback. They're available audio. They're available ebook. And we also have a little mini cartoon series. So go check those out. They're available everywhere. BarnesandNoble.com, Amazon.com, iTunes. The audio version is streaming on Spotify, Tidal. It's just everywhere. Everywhere that I can get it, I pretty much get it. And also, thanks to Jay Fox for coming out to New York City. See me at Barnes & Noble. I will be at Barnes & Noble Denver on December 10th. I'll be at Barnes & Noble Denver December 10th doing a book fair, Wesley Learns Book Fair. So for the people out there who already have the books, who want to see other kids get the books, you can purchase a book to be donated to kids in a Royal Public Schools and the Boys and Girls Club. So we have that available as well. If you already purchased the book and you already read it, give it to another kid, right? So that was something cool that I heard that Dave Ramsey would do. So if you already got the book, you read it, you loved it, pass it on to somebody else, right? Circulate. But anyway, back to the topic. When investing becomes scary, right now we know the stock market just crossed over 28,000 points, the highest it's ever been. Stocks are just roaring up. I feel like a genius. I look like a genius. All my buddies are saying, Prince, thank you for stock recommendations. The people accounts that I help recommend, they're saying, Prince, thank you. You're so good. I made 20% this year. I made 15% this year. My Microsoft stock went up 40-some percent. McDonald's this year alone, 30-some percent. Everything is just hunky-dory in the world of investing. It seems like it just can't stop, right? And this is when the market has been on an uproar since 2009. And when I feel this euphoria, that's what I always see in these old books. This old book was written in 1930. The thing about, I love to learn about history, is history teaches you what happened in the future. When this book was written, the SEC didn't even exist. There was no regulations on the market. So I wanted to see what was people thinking before the market crash, right? Everybody studies. When I studied 2008, I want to know what was people thinking in 2006, 2007, when the market was just roaring, right? 1987, when Black Monday hit, how people felt, what was going on, what was the sense of everybody going on, right? So because we know the market takes the stairs up, doop, 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 then it falls off, it takes the elevator down. So even though I probably would never be able to time the market, but I like to know when this sense of euphoria comes, right? Everybody wants to invest now. Everybody's like, Prince, oh, wow, look, Disney had a great week this week. The stock market is at an all-time high. Dow Jones over 28,000. It's going to hit 30,000. I believe the market correction or crash won't happen until after Trump is elected. But I do feel we're going to see a market downturn in December, like last year. All my people out there, I told about the index fund SWPPX, the cheapest one that was out there. It went down to about what, $35, maybe 25, $35 or something like that. And now look at it now, it's $48. You're talking about a 30-40% return from Christmas to now. Great, right? And I think that the market always cools off in the wintertime. So I think we will see a cool off. But when I see this, when the market gets scary, when everything's become scary, when I see everything's just doing so great, everybody has this sense of euphoria. Everybody wants to get these returns of the market. That's when investing becomes scary. Why does investing become scary? Because I learned from the old heads, the guys with a little gray on the side of their head, who's been around. They was here when '08 happened. They was here when the dot-com bomb happened. They was here when the 87, way before I was even investing, way before I was even born. They've been around. They saw this. I read these old school books from 1929. What was people thinking? How people was feeling right before the market hit. And in the financial industry, you always see a sense of euphoria. And euphoria is like when everybody just kind of loses their mind and just start buying stuff that makes no sense. Even when it don't make sense, everybody buys it off of the premises that, hey, it makes money. You look like a dummy if you don't buy it. So we all want to get in. And it was one thing that my good friend that y'all seen, Uncle James, told me. He said, Prince, he told me the story of this guy. I can't remember how it went, but the guy knew the market downturn was coming when the guy that was shining his shoes started making stock recommendations. He said, hey, he was getting his shoes shined, and the guy who was shining his shoes like, yeah, you need to get in on this and blah, 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 blah. He said, oh, really? Wow. A guy who knows absolutely nothing, who never invested in their life, becomes an investment genius. I'm out. And that's when he got out right before the market. He went to his office and he sold everything right before the market declined, right? And the sense behind that is when things are going well, everybody's just, oh man, everybody's making money. Everybody's doing so well. Stock market is doing so good. I'm not going to sit here and lie. I thought the market was going to crash in December. If you go back, if y'all remember my video, Christmas Eve on December, I had Wes sitting on my lap, my son sitting on my lap, and I was telling him, son, I'm going to get you some index funds, right? Because look, the market is down 20%. We have hit, we finally hit, what was the correction? We finally hit a correction. We passed over a correction. We may be going into a recession. That's great. This is a great time to buy. I brought some index funds, and then I brought some leverage bullish ETFs for about $25 a piece. Now I just checked today; those things are $58, right? So I made over 100 and something percent return from Christmas to now. I'm not complaining, right? I put $500. Like, hey, son, instead of me buying you all these toys, I'm going to get you some of this right here, blah blah. And you're talking about I made over 100 and something percent return off of, you can look at the stock symbol SPXL. Look at what it was on Christmas Eve. It was about $25 or something. Now it's almost $60, right? Great for me. Cool. But I wasn't expecting that to happen. Glad it happened in my favor. But when I see everybody's just, now it's hard for me to want to invest. I want to buy things. The last stock that I purchased was Uber. And the only reason why I purchased Uber because it dropped 44%. Uber has dropped 44% since its IPO. So since it's dropped 44%, I don't want to buy Disney now. Disney brought out Disney Plus, got 10 million subscribers. Everybody stock just runs up 10%. That's not what I want to buy. Stock market is running off like a bandit. Great for my investments I currently hold. And one position I just made was McDonald's. I was already holding McDonald's for the long term, but what ended up happening was the CEO got fired for sexual assault. The CEO got fired for sexual assault. The stock dropped 3%. Stock dropped 3% in one day. I ran in and brought some. I didn't run, but I went in and bought a couple shares in my son's account and my wife's account. And we, since then I made it bounced right back because I believe McDonald's CEO, to be the CEO of McDonald's or to be the CEO of Coca-Cola, I believe that anybody can, I won't say anybody could run it, but it was something that Warren Buffett made famous when he said that a ham sandwich could run Coca-Cola. And he's saying that because it's pretty hard to screw up Coca-Cola. It's such a strong brand. It's been around so long. It's pretty freaking hard to screw up Coca-Cola. And that's the same thing same way I feel about McDonald's. I mean, you have some things you can re-innovate, but it's pretty hard to screw up the number one fast food brand in the world. So, all right, we got a question. Jordan. Okay, D. Brooks says he wants to buy the Western Learn series for his kids. Thank you, D. Brooks. I appreciate that. Appreciate the support for his kids for Christmas. Awesome. That's the gift that continues to give, is breaking down, the concept of investing, credit, and insurance as a child. Is very tremendous to help, right? And now we have Jordan says, "What's happening? What's happening, man? Long time follower, Jordan. What's going on?" He says he's been a long time follower. Where you from, Jordan? Have a question for you, if that's cool. Shoot your question. This is for the people that's catching the playback on the podcast. This is for the people that are here live that are commenting. So yeah, go ahead and shoot your question. We got Tato Amar says zero. I think you meant zero free index fund from Fidelity. Yes, Fidelity. The only bad thing about Fidelity's zero free index funds, they're only available on Fidelity, right? So unless they change that, I've tried to go find their zero free funds, and it's on Fidelity. It's not on a TD Ameritrade. I didn't see it on the TD Ameritrade. I didn't see it on the ETrade. I didn't see it on on Charles Schwab. So Fidelity, quit hogging it up and spread the love. But I understand, it's a marketing ploy to where they want you to come buy from them, right? Come to their platform to get their zero free index funds. But it's not strong enough to make me shift over my whole portfolio. But it's a good deal if you got a portfolio over there. But it's not stronger than me go, let me shut down my whole portfolio and run behind these zero free index funds. So it's definitely not on that platform. Give me 1 second here. I'm sorry about that feedback. Just sharing the scene real quick. So 1 second. So yes. So the concept of investing is so I look for what's going down right now. What is the bargain right now? I caught that little piece with McDonald's. I was able to jump in there and make a quick 3 to 4%. I think that was like last week when the CEO got fired, and I knew nothing was going to happen with the company. I knew by Thanksgiving we'd been forgot that the CEO of McDonald's got fired. So for sexual harassment, that had nothing to do financially with the company. It said nothing of what was the company? Under Armour. Under Armour came out with accounting principles. Those are numbers, for maybe possibly messing up accounting. Okay, we got Andrew Reese says, hello, everybody. Is saying everybody's saying it's going to crash. Yeah, but yeah, people come out there and say, oh, the market's going to crash. The market's going to crash. We know that. It's like saying, hey, man, it's going to rain. Hey, y'all, it's going to rain. Everybody knows it's going to rain. The question is, when is it going to rain, right? So I'm not going to try to figure out when is it going to rain and miss out on great investment times. Give me 1 second. Let me straighten up my camera here. All right. There we go. I got it on this lever to make sure it don't get hot. So here we go. Sorry about that. You know what I'm going to do? I got it. Sorry about that. Y'all give me 1 second. I'm getting my camera straight. Do here. Yes, we've got some. Okay, let's read some of the comments. Jordan, young entrepreneur looking to capitalize on compound interest portfolio. My question is, do I sell regular? I guess he's trying to say to regulate and make the purchase myself, or should I have my banker do it for me? I'll put it to you this way. When I want to go get maintenance on my car, I get a mechanic. December 17th, I had to go get my annual check for my teeth. I'm going to go see a dentist. When I'm ready to buy a house, I'm going to go get a real estate agent. My car breaks down. I'm going to get a mechanic. I want a nice haircut. I'm going to go get a barber. If I'm looking to invest, I'm going to go get an investment advisor. That's just what it is. So as you grow, the way to grow is to get a financial advisor or a financial team. Those are the greatest mistakes that people make. The greatest mistake that I made. But the thing about it is when you get a financial advisor, your financial advisor should be a teacher, somebody that's teaching you. The first financial advisor I had was I wanted to get in investing, but I was completely clueless. And my supervisor, I was serving on a USS Albuquerque. I was on a submarine. He says, "Hey, Prince, go to the bank, talk to the guy at the bank." Went to the bank. They hooked me up with a financial advisor. I got with the financial advisor, and he said, "Hey, you know what? You should get a large cap index fund, right?" At that time, I didn't know what the heck he was talking about. I probably was like 19 years old. I was financially illiterate, right? I didn't understand investing at all. I'm like, well, what is a large cap? Oh, these are like the big companies. I'm like, what companies? Like the top big companies or whatever. I said, okay. So what am I supposed to do? Just put a little bit in every month and blah, 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 blah. Didn't really explain it to me, right? And it got to a point since I didn't understand it and I was investing, which I wish I'd had the guidance. He wasn't educating me. And you know, he wasn't educating me. So guess what I ended up doing? I ended up just stopping it. As soon as it got bad or as soon as something went wrong, I just stopped it, right? I was like, you know what? Screw this. I'm not going to do it anymore. Very dumb idea on my behalf, right? And I believe if I go back then, if my financial advisor was an educator, like how I'm doing, everybody here, I do YouTube, I go out and talk to people. If he would have made me more financially literate, then I would have been more confident in investing. I probably would have put more money there. But he didn't explain to me what was a Roth, what was traditional, what was a Roth, what was an IRA, what was the differences, what was in the large cap, how can I grow, how can I pick stocks. So he wasn't educating me. It was due to my financial illiteracy, right? That's what made me not want to invest. And that's what when I talk to a lot of $1 million athletes, new current millionaires, the ones who've gone broke, ones who've done very well. Most of them, they say, "Oh, my financial advisor ripped me off." Is most of them stupid. Most of them are stupid. Most of them are dumb. Somebody tried to tell them and tried to help them, and due to the financial advisor not educating them, and due to the athlete or the millionaire not listening to them, they kind of crashed, and everything crashed and burned. But they didn't understand. He didn't explain the concept of compound interest. What is compound interest? Hey, where I'm trying to preserve capital. I'm a young entrepreneur. I want to invest. How are some ways I can preserve capital? Okay, look, we have solid companies that have increasing dividends. We're going to start with companies that historically pay dividends. Coca-Cola. Coca-Cola has paid solid dividends and have raised those dividends over the year. So let's look at a Coca-Cola. Let's look at AT&T. These are companies you can invest in that are going to pay you every year, every quarter. They're going to buy you more shares and it's going to grow, blah, 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 whatever the case may be. Now, if you don't want to do that, you can also go into CDs. CDs, you can make compounded interest and it's way less risky. You're going to take no risk, but you're only going to make about 1% a year, maybe 2% a year if we get you into these CDs. Next up, we have bonds. We have AAA bonds. We have single A. We have single A, double A, AAA bonds, right? We're looking at, we can go get bonds from, we can get high grade bonds and, it's a little bit more risk, but you can make a return on investment that way. A 5-year bond. We could get long-term ETFs. Long-term ETFs will pay you monthly dividends, right? So when nobody is stretching that stuff out, showing you what you have available to you, the pros and the cons to everything, that's what makes people, that's what you should be looking for, Jordan. Okay, so let me go down. Have a question. She said everybody said market. Okay, let's go back. Tony Sears said we like Tesla. Or is that TESL, Tony? Oh, Tesla. Okay, Tesla. He said he likes Tesla and Alibaba. Right? Cool. MF says markets are cynical. You're right. Markets move in cycles. We all know that. What are the four market cycles? The four market cycles are trough, expansion, peak, recession, trough, expansion, peak, recession, trough. You guys get it? Guys and girls get it? We're talking about those four market cycles, right? I listed out all four of them, right? So that's how it goes. Save cash for market. Yes, save cash for market crash. What strategy should you have when it happens? What's your plan? All right. I believe that at least at minimum 10% of your portfolio should be cash, right? Or short-term treasury bonds. That's what Berkshire uses. Berkshire currently, when I was at Berkshire in May, they had 125 billion in cash, what they was reporting. Cash, not portfolio. Their portfolio is worth about like a quarter trillion, 250 billion, right? But in cash, they had 125 billion. Now they just reported a couple of weeks ago, they have 125 billion in cash. Why do they have so much cash? So when the market crashes, they have stuff to go buy stuff with. So I believe 10%. If you got $1,000 portfolio, you should at least have $100 saved back that you shouldn't be touching just for a market crash, advantages to be able to take advantage of, right? And since we don't know when that crash is going to happen, if you got money just sitting there in cash, waiting, let's say 2 years go by. Now you just have placed that money at inflation risk. That money has not kept up with inflation. So I've seen people put it into short-term treasury bond ETFs. So you can get an ETF that's short-term treasury that may pay you 1 or 2% a year that you can cash out since there are no more market, since there are no more fees for most stocks. Check with your broker. You might better buy it for free, then turn around and sell it when the market crash. My plan when the market crash, buy. I ain't selling nothing to buy. I'm looking at things that go for sale. If Costco crashes when the market crash, Costco is a big, strong financial company. When I look at a Costco crash, when I look at maybe like a McDonald's crash, a Google, that's another one I'm invested into, a Google crash, things like that or whatnot. And when I look at these big, well-to-do companies just start to fall into financial ruins, those are things I'm going to be looking to buy. That's my plan. My plan is to sell my bonds, put my cash to work, take advantage. Oh, Jordan, you're from Canada. That's what I'm talking about, Jordan. All right, I'm coming down slowly. Tesla, I haven't looked into Alibaba a whole lot because I'm a big Tesla just became profitable, this year. So Tesla is looking pretty good so far right now, but we'll see how they make it work. MF banker have a conflict of interest for them, more profitable for the bank. MF, you're correct. This is why, Jordan, when you're looking for your financial advisor, make sure they are a fiduciary. Fiduciaries, everybody write that down. Fiduciary. Write down fiduciary. When you sit down to a financial advisor, first question you should ask, are you a fiduciary? Prince, why would you ask if my financial advisor fiduciary? If you pass the Series 65, that makes you a fiduciary, meaning that you have to act within the best interest of your client, right? Or most CFPs, IRA people, they're fiduciaries. Real estate agents are fiduciaries. You have to act within the best interest of your clients by the law. If you don't act within the best interest of your clients and you put your clients at substantial risk, you can go to jail. But if a person is a suitability means that they find something that is suitable for you. They say, okay, Mr. Jordan, look, yes, we recommended you to buy Apple or whatever the case may be, or some high-speed company, but you still was going to make money, but you weren't going to make money the way you wanted to make money. So they can get away with that in a court of law by saying that, hey, this is what's suitable for you. All they got to prove is that this investment was suitable for you. A fiduciary, you must act within the best interest of your client. Jordan comes to me and says, Prince, I want to put my money, I want to preserve capital, I want little to no risk, and I go out there and buy him a stock, he can have me put in jail, right? Fiduciary can be put in jail for that because you did not act within the best interest of your client. So that's what you need to keep in mind. Ask if your financial advisor is a fiduciary first. And number two, they should be teaching you and guiding you along the way as they're building your portfolio. All right, what else we got there? So that's so Tato, what's that? I think that's Tato. Tato says Navy active duty USS Woodby Island. Woodby Island, there we go. What's going on there, shipmate? Out there, USS Woodby Island. I think that's in what a Woodby Island at? Is that in Seattle? I mean, not in Seattle, but in Washington. But that's there we go. Jordan, I have 15K to invest now and want to throw a couple hundred in a month, right? So you need a portfolio. You should seek a professional. You should seek a fiduciary to help you with investing your money. Here we go. MF, is it possible to buy, I think you mean to say bonds or other statements? Yes, you can buy bonds through TD Ameritrade. You can buy bond ETFs. You can buy corporate bonds. You can buy junk bonds, right? Yes, you can. And Jordan says, thanks you for your response. Anytime. Kama says, hey, fam, U.S. teacher working with military connected students. I'm a math teacher and will be teaching financial literacy to teens next summer. Oh, there we go. Teaching financial literacy to teens next summer. Awesome, awesome. Congratulations. Here we go. Angeli, when bank is good to get a financial agent? I guess she's saying what bank is good to get a financial agent. Seeking for a financial advisor. Seeking for a financial advisor. It could be pretty tough. Let me think about the best way to seek for financial advisors, right? I would say first it would have to be, once you meet them, you have to trust them. You got to trust them. They have to be a teacher. They have to be a fiduciary. Those are my top three things. Are you a fiduciary? Are you going to be a teacher? Are you going to teach me? I don't care if I gave you $5 or if I gave you $5 million. I know I hate it. I hate it. I know people, they give you the less amount of money and they'll be the first to complain. I know how that feels. So I know how financial advisors may feel like, man, this guy gave me $500 and, he wants the world from me. But everybody should be treated equally. I understand, because my $500 could be my life savings. To somebody else, it could be throwaway money. So everybody, no matter what your account is, should be treated with the same amount of respect and dignity, regardless of what you gave somebody. But I do understand, to the people that's in the industry, they're like, man, this dude gave me, $5 and he wants this. He calls me every day. He texts me all the time. He calling my office and leaving me voicemail. He wants to know this, and this. Man, this guy's not worth it. But if that's the case, that's why some financial advisors have minimum accounts. You must have a $5,000 account, $10,000 account, whatever. Okay, so let's go on down to the next question. So I have to look into that. What's the best way to find a financial advisor? How can I find a good one to be unbiased? If I was a regular person looking for a financial advisor out there, I know people will say, hey, Google, but it should be a little bit more than that. I got to think about that one. She says, love it, MF. Berkshire is waiting with cash since when? 5 years? Berkshire has always been sitting on cash for a long time. They've been sitting on cash, I want to say, since 2000. You got to think about it. Every time you buy an index fund, Berkshire Hathaway is one of the top 500 companies. They get a little bit of that money. Maybe not a whole lot, but they get a little bit of money every time we buy the index funds. And they're sitting back holding it pretty much. So they've been holding cash for a long time, Ever since 2009, they bought a lot of good stuff, but they've been holding cash sitting on cash for a good bit of time. She said, yes. Darius Butler, what's up, Dykes? What's going on, Darius Butler? He say, I put 5K on VYM. What is VYM ETF? I got to look that up. That's what Darius Butler said. Kima, it says she's from Japan. So we got Japan in the house. We got Canada in the house. Somebody said Cleveland. So this was going on. Gary Wallace, what's going on, Gary? He said, put it all in the opportunity cost is too high to put a little. MF says he's from Brazil. What's going on, Prince? When are you going to start this fund? One day, man. One day, I'm 35 years old now. Like you guys and girls that know who's been following me for a while. Oh, Vanguard. Oh, VYM. So Darius Butler, why did you put it into a high dividend yield? What's the purpose behind that? I mean, obviously, I'm guessing you want dividends, but how old are you, Darius? If your goal is to preserve capital, if you want to make a cash flow, great. But if you're trying to grow your money, I don't know. I don't see that. What's going on, Crystal? Crystal says, peace to all. Tap in, tell everybody where you're from. Tap in, tell everybody where you're from as you, what you call it. So anyway, that's the big piece with, I went through everybody's question. Oh my God. MS says, when we sell ETFs in Brazil, we pay 15% over the profit. Same in US? No. You need a new trading platform, MF. What trading platform are you using? No. When we sell an ETF here, you pay the trade fee. Now, since the fees changed around, they could be changing for a lot of platforms. 15%. No, you don't pay a percentage. You have a transaction fee. I have to look into that, but no. What do I think about Apple? I like Apple. The reason why I like Apple's a $1 trillion company. Apple is getting into the streaming game, which is very bad for Netflix. You just had Disney Plus, you got Hulu, you got Amazon in the game, you got Apple in the game, and that's all Netflix does. Apple at least sell phones. They at least sell MacBooks. They at least sell iPads. I have an iPad. I got an iPhone. I'm on a MacBook. So, and then they're in the streaming service. They're a $1 trillion company. They pay nice dividends. They've had continuously rising dividends, but I do like Microsoft a little bit more. Microsoft dividend is a little bit higher, but they're right there with each other. I do like Microsoft and Apple. I used to have Apple in the beginning, but I switched over to Microsoft, and Microsoft this year has been great for me. So I don't have any regrets at all. So no, I don't think TD Ameritrade charges you a percentage of profit. TD Ameritrade usually charges you just for your I think someone may cost you $50 to $49.99 now. It may cost you $50 to get in, then it may cost you $50 to get out. I never had to pay on TD Ameritrade a percentage of my profits. I always paid whatever the fee was. So yes, Virginia, we got Virginia House. Who that? Yarn. I'm horrible with names. I barely can read. Goodness gracious. But anyway, investing becomes scary when I see everybody is into it because everybody is a genius in a bull market, right? Okay, so John said, hey, Prince, where should I start? I got a little to invest. How would I invest if I was starting off? First things first. I don't know how old are you, Yarn, whatever, right? Can't remember your name. If I'm saying it right. First of all, how old are you? If you're in your 20s or if you're in your 30s, you should first start off with index funds, right? I know Fidelity has 0% index funds, top 500 companies in America. All right, you're 28 years old. You're 28 years old. You just get into the world of investing. First thing is, does your employer offer a 401k? Does your employer offer a 401k? Why do I ask that? Because if your employer offers a 401k, I would give you a personal situation, right? So my wife, I have an IRA for her. I started this IRA for a couple of years ago. IRA has done pretty well, right? I want to say over the last couple of years, the entire portfolio is probably up over 25%, right? Which is great. Not working full-time, student using GI Bill. Okay. So she comes home one day from her job and she's like, Prince, they have a 401k there, but I'm not worried about it because I know you're taking care of my IRA, my retirement fund. I'm happy with that. I don't need another one. I said, hold on, wait. Are they matching? She's like, yes, they have a matching program. They have a matching program. Invest with them, right? If you put in $1 and they put in $1, you are being able to not only invest, you're compounding your interest. So that's why I asked if you got a 401k. So if you're not working, you're a college student, you want to get into the world of investing, the first thing I would say is start your IRA. Start your own IRA, individual retirement account, a Roth IRA, right? And the reason why I would say a Roth for most people, I don't know you personally, I haven't sat down with you, so it's not a recommendation. If you plan on making more money in the future, tax benefits, it's best to pay tax on little money than to pay tax on big money. Right now, you're probably a broke college student getting a GI Bill or whatever the case may be, and you're only making $30,000 a year. I'd rather pay taxes on that money than once you graduate college, get all your certifications. Now you're making $120,000 a year. Now you got to be in that tax bracket. So I'd rather pay my taxes now than to pay my taxes later. So I would get a Roth IRA. You can start with a TD Ameritrade or whatever the case may be. You have a limit of $5,500. I would put money in there every month, maybe once a week, once a quarter, whatever it could be, once a week. Every time you get paid, twice a week, once a month, have my money going in there. And then when my money is going in there, first thing I would be buying is something like a Charles Schwab SWPPX. Once you have that SWPPX going, that's a Charles Schwab Index Fund S&P 500. No, I'm not sponsored by anybody, but I know that's the best one out there with the lowest expense ratio of 0.02, right? I know Fidelity is free. Fidelity has a free index fund, but Fidelity, they only play that on their platform that I've seen and know of. But if you have their platform, good for you. But I don't. And you start there first once you have your index funds going. Now, that's the world of investing. Then once you have your index fund, I look at it as layers of the cake. Now you got your index funds. Now I will move on to large cap companies. Now I will look at your S&P 500 is mostly large cap companies, but I would look at individual large cap companies because individual large cap companies like a Microsoft or Apple or McDonald's, those things can outperform the S&P 500. Then I may look into research. When you keep investing to the S&P 500, start with companies that you know. You like Verizon. You use Verizon. You lose. Everybody wants to go to Disney. You lose this Apple. Then you start to learn to read financial reports. You educate yourself on financial reports. Then you get your large cap company. Once you have a large cap company, then I look at getting a small cap. Then at the very top, some sprinkles. I would look at getting like a Uber or some company like that. And not Uber particularly. I'm not saying them, but a little bit more higher risk, right? Less than 10% of my portfolio. Then I would look into real estate, right? Because every wealthy person has real estate, stocks, and their own business. Guaranteed. I don't care who they are. If they're rich or they're wealthy, they got some form of land somewhere. They have some form of stock portfolio, and they have some form of business. If they're in $1 billion range, I'm pretty sure they are attached to a company that's gone public. Every single one that I know and met. So Kimi from Japan says, do you have a video that shows us how to make auto payments directly to our investments? I have auto payments going to TD Ameritrade, but when I have them go there to directly to a fund. So yes, on ETrade, there's a thing called automatic investment plan, AIP. Yes, I do have a video on that. If you DM me, I will see you that video. TD Ameritrade, I think I've done a video on that too, where you have your money. She's saying, hey, my money's going directly to there, but once it's there, it doesn't buy anything. I think that you can set up auto pay, but I think you have to call with TD Ameritrade, if I'm not mistaken. TD Ameritrade, your money goes in, then you have to call them to set up the auto pay. With ETrade, you can do it all online. Like I can go in and say, on the 15th of every month, buy me one share of SWP, buy me $50 of SWPPX. Also, hit the thumbs up button if you like the stuff. We got all these people watching. Hit the thumbs up button. That helps with the analytics that I heard and push it out. So, yes, you can do that. With ETrade, you can do it all online. With TD Ameritrade, you can set some stuff up and you can set it up to where every month you can go in and buy. Thank you guys for hitting the thumbs up button. So how much is it to open a Roth IRA? A Roth IRA is free to open, right? It doesn't cost anything. I have step-by-step tutorials right here on this channel to show you how to open up a Roth IRA with TD Ameritrade and with ETrade. You can open up a Roth IRA, have your money go directly in there. So you can start your own Roth. Or you can do a brokerage account. The difference between a Roth IRA and a brokerage account, A Roth IRA, you only could be able to make so much money. If you're a rich person, stop playing. You're not going to be able to open up a Roth IRA. If you make a lot of money, depending if you're single or married, you make over $250,000 a year in your household, you probably won't qualify for a Roth IRA. If you're over 55, they'll let you do like $6,000 or something like that. But the thing about a Roth IRA is that you don't have to pay taxes on it. The money is already taxed. You can invest your money and let it grow until you're 59 and a half, right? Not a bad deal. And you can draw on at 59 and a half with no penalties whatsoever. Brokerage account, you're going to have to pay some taxes. Okay, let's go here. She said, okay, Kimma, if military, you can do TSP. They definitely match up to 5% for civilians. Not sure percentage for active duty. Yes, it is 5% for the military and active duty. That's something that just took effect, I want to say, this year. People could switch over their TSP. And first, you should look into them. You should have most military people will make more money after their military life. Right? More people will make more money after their life, right? And what I mean by that is, let's say you take a person in the military, they may be making $70,000 a year, maybe make 80,000, maybe make 100. Then they're going to retire with their pension. They may make $40,000 a year from the military. Then they're probably going to go off and get another job that's going to pay them 100,000. So here they are with $140,000 coming in every single month now they're making more money. So, and then by the time they get to retirement age, so most people, hey, pay your taxes while you're in the military, getting peanuts. So when you start to eat steak, you don't have to give up a portion of the steak. Give a portion of the peanuts versus the steak. Like me, I plan on making more money outside of the military than I do inside of the military, right? With military people's pensions and all of the good stuff. So 1 second. And that's what okay, so we're gonna keep pushing on. Jordan says, thank you so much. Anytime, my man Jordan. Or girl, I don't know. I've gotten hit before that, Kima said, thanks. Done. Self-directed IRA. Yes, a self-directed IRA. It's an individual retirement account that you pretty much have control over. And I've seen people use their IRAs to purchase land from their IRA. I've seen people use their IRA to go purchase franchise fees to get a franchise. So it definitely could be beneficial. So I'm glad, great questions. I know the people that's going to catch this playback, these are live people right now that comes into the chat. Share this around if you think it's good. That people should tune in, definitely. But the thing about it is, when I studied everything from 1929 to 1987 to 2008 to 2000, I was just getting into the world of investing back in 2000. I was just becoming curious around about 2007, right? Right at the top of the market. That's when I became curious. The reason why I became curious, one, I had extra money. Two, every time I turned on the news, it was like it is today. Stock market hit us an all-time high. Microsoft is at $21. That's crazy. That it was at $21 back in 2008. Microsoft is at $21. It was at $5 before. Look at Microsoft, run away. Look at Nike, run away. Look at the S&P 500. Everybody's just this sense of euphoria. Investors feel like geniuses, and you feel dumb if you're not investing. You feel like you're missing out. FITMO, what is FITMO, right? Fear of missing out. Man, I should have got it. I should have brought that stock. My buddy was telling me, that's what people are doing with me right now. It's like, man, Prince told me about Microsoft. He told me about McDonald's. He told me about, these index funds. Man, he told me about these dividends. Man, he told me about it when it was 100, if people hit me up now, they brought the SPY years ago. The SPY is the SPY. That's the S&P 500 index, right? FITMO, fear of missing out, right? FOMO, what do people call it? FOMO. And they're like, man, Prince, you told me to buy this thing for $100. It was $198. Man, I thought you was crazy. Now it's over $300. Man, you're a genius. I brought it, man. I done made 50%. I done made 60%. I done made this, that, right? Everybody get this sense of euphoria. I need to buy some more. I need to listen to Prince. I need to blah, blah, blah. Everybody wants to come into the world of investing, right? That's exactly how I felt back in 2008. I had that fear of missing out. I want to get into the market. I got into the market, knew nothing, completely financially illiterate. I was debt free. I paid off all my debt. That's the first thing I would tell everybody. I owned my car. I was living in an apartment. I was single, had no kids. I'm like, what am I supposed to do with this money? So I was just saving it. And this guy said, Prince, get some mutual funds. I didn't understand the mutual funds, so I just got some. And I was putting money in. I just kept seeing it go down, go down, go down. And I remember my mom was telling me, Prince, leave that investing alone. You don't know what you're going to do. You're going to lose your money. And I saw myself losing money. Then the market crashed. And I was just like, man, I'm going to sell this crap. Completely financially illiterate. That's why I write what I write today. Jonathan Matthews said, what about putting your money in a Citibank instead of a Roth? What's a CIT bank? Is that Citibank you're trying to say? I don't know what a CIT bank, Jonathan. Tell me what that is. School me. I don't know what that is. I don't know if that's an acronym I don't know nothing about. Please school me on that. If you're talking about a regular bank account, the reason why you don't put your money into a regular bank account, because what is the percentage that you're going to earn from a bank account? Thanks for everybody hitting the thumbs up. Hit the thumbs up. Hit that share button. Okay. Kimmy said, I listened to you about Uber and how there are billions who are not pulling their money out. Yes. Uber is a non-profitable company. It's not a good company, from financial standards, going by the ideology of my idol and Warren Buffett, right? He says, if the company's not profitable, don't invest into it, right? And he was 100% right. When Uber IPO'd, everybody knew I was against it. I was like, it's running high. Everybody, just like Airbnb will do. Airbnb is going to go public next year. Everybody's going to run high. It's going to run up. So I wait until it started to crash. Now it's down 44%. And then I look at it and I say, wow, Uber is down 44%. $25. So, $25 for a company. Look at the rideshare business. The rideshare company, just pretty much everybody has used the Uber, know what Uber is. I think it's the number one brand. I compared it to Lyft. It's in a way better financial position. So it's the number one brand in the new rideshare business that's not profitable right now, backed by billionaires. I looked through the research. I saw Google, a company that I'm invested in, has 71 million shares of Uber. I saw Goldman Sachs, the number 2 investment bank in the world, has 71 million shares, $3 billion worth of Uber. Okay. Then I looked at Fidelity. Somebody was in here earlier saying, oh, Fidelity index fund, Fidelity. Did you know Fidelity has $3 billion in the Uber? Right? So these people have billions, and all these big companies got billions of dollars in the Uber. Then it reminded me of somebody. I said, whoa, this reminds me of Facebook. When Facebook came out, it was the first social media company to go public. Now you got Pinterest, Twitter, Snapchat, everybody's public now, right? Back when Facebook came out, I don't even think Facebook was even uploading videos on Facebook back then. I was like, what is this? It's a website. All I thought in my head was MySpace was the hot thing a couple years ago. Facebook has pushed MySpace out the way. A couple years from now, somebody will push Facebook out the way, right? That's what I was thinking. And then I'm like, this is the first social media thing. It's crazy. It came out. I think it IPO around 40 some bucks. And then it crashed. When it did its financials, it crashed. And it crashed and it said, hey, we're losing money. Facebook can't make money. Facebook, blah, 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 Facebook, blah, blah, blah. And I said, look, I told you, look at this. What idiot would invest into some Facebook? Man, it don't even make money. And guess what? Over the years, Facebook figured it out. Same thing with Tesla. Tesla came out. 2003 was founded, went public in 2010. It was $17, $20. The electric car business, one of the first ones that we're going to do electric cars, not profitable, $20, $40 or whatnot. Oh, it's crazy. What are they doing? Right? It took them 9 years before they finally figured out how to turn a profit. Right? They just went profitable in 2000, and now they're like $300. Now you look at Facebook, it's probably close to $200, right? And the biggest thing that I saw, that I noticed that most people are not afforded, they had billions of dollars dumped into them until they figured it out. Like me, for example, if somebody came in here into my basement, which looks like I got stuff written all over the walls. I got all type of stuff. Got my books, all that good stuff, right? I'm like a hermit in here. Somebody came in here and just dumped billions of dollars on me and just said, hey, figure something out, figure something out, figure something out, figure something out. Just gave me that opportunity, figure something out. I will figure something out. And when I looked at it, when I look at, it's no sign in the city. The only time I would feel that Uber wouldn't make it is if their funders was to pull away. It's like a foundation. I have a foundation. A foundation is nothing without sponsors. Everybody loves foundational work. Everybody loves when the foundation goes out. Prince, that's a great job. Go teach the kids financial literacy. Go buy them stocks. Give them books. Give them audio books, ebooks, video, this, that, whatever the case may be. But got to remember, creating books are not free. The illustrations are not free. The internet is not free. Gas is not free. I can't eat free. I can't do anything, right? So it's due to sponsors, supporters, people that's buying your products. It's due to people that are granting you, you might better get a federal grant, maybe you may get a corporate sponsor, maybe you maybe get donors or whatnot that help fund you to do that. Once that funding goes away, everything stops. Everything stops. If Uber loses its funders, everything stops. That's when I will see smoke in the city. When I see Goldman Sachs pull out. When I see, what are you doing, Wes? That's Wesley back there, y'all. Tell everybody, hey.
Hey.
See?
Hi.
Yeah, you get the haircut.
And my hair's gonna grow back.
Yep. All right, I'll be up there in a little bit, okay?
Oh, and we got to fight.
Huh?
We got to play a fighting game.
Oh, you want to box?
Yeah.
Okay. Let me finish up, okay? So, when somebody wants to shut something down, everything stops and starts with funding. Everything stops and starts with funding. If you want to stop something,
here's your question.
Okay, thanks. If you want to stop something, cut down the funding. If you want to start something, put some money behind it. You want to see something continue to grow, put money behind it. So what happened with when people want to get people off the air or people want to shut somebody down, what do? They find out what their funders are. Where's he getting his money from? And they find out where you get your money from, and they attack that. In the military, you want to shut a company down, or you want to every punishment comes with some type of financial responsibility. We're going to place sanctions on your company. We're not going to trade with your company. We're going to stop other people from trading from you. Those are all financial things because I'm just choking you out. I know that if I don't fund you, all that's going to stop, right? All that's going to stop. If a company loses funding, or a company or a foundation and whatever, they lose funding, then guess what? Everything else stops. That's what you got to look into it. So that was one of the things with Uber. I didn't mean to go off on a tangent about giving you the psychological thought process. I went through their finances. I said, if I'm wrong about the number one company in a rideshare, in a new industry, in a rideshare business that everybody's trying to get into now, if I'm wrong about that, 5 years from now, I can take that hit for $25. That's what Uber has dropped down to, $25. Okay, for $25, I can take that, And when I see everybody running from it, oh, get out of here. Uber is horrible. Uber lost $1.6 billion. Uber is a horrible investment. That's when I start to look. it's now investing is scary when I see everybody like, oh, look at Disney Plus, Disney. I get scared when I see everybody running to it. It goes to the classic line: be greedy when others are fearful. Be fearful when others are greedy. All right, Jordan Matthews said high yield savings account from a high yield savings account. Ask yourself this year, some high yield savings accounts are out there, but the only question is, most of those high yield savings accounts, the ones that I really seen are overseas. But you got to ask yourself, how safe is your money? Because like a bond, the bond that pays the high, the bond that pays the highest interest is usually the bond that comes with most risk. So when I'm looking at a high yield savings account, let's say if it's yielding me 4%. Still, I'm cut off. I'm cut off from opportunity risk. If my savings account made me 4% and I'm trying to invest, the market so far has returned me 20, 30, 40%. I just missed out on 20 to 30, 40%. Right? Yes, you're safe. You don't have to worry about a market downturn. But guess what? You also are not capitalizing from the market upside. Right? And investing is not for everybody. Stocks are not for everybody. People can't stomach the roller coaster. When you get on a roller coaster and they buckle you in, when do you get off the roller coaster? Do you get off the roller coaster when it is at its peak? Do you get off the roller coaster at the bottom? What do you get off the roller coaster? The market is like a roller coaster. It's going to have its times when it's going to go shoot way up. It's going to have its time to shoot way down. But I'm not there. I'm buckled in. I'm there for the ups. I'm there for the downs. I'm there for the backups because I know what I'm riding to, right? I'm not going to, the market gets to the high. I'm like, oh, this is where I want to get up. No, that's not me. That's not a long-term investor. But if you're somebody like, hey, I have $15,000 and this is for my child to go to college next year, then a high yield savings account, a CD, or a regular savings account may be the best thing for you. Or a bond, right? A high grade corporate bond may be something you may want to be interested in, right? Or just a regular CD, a 1 year CD to put your money in to make 2 to 3%. But if I'm investing for 20, 30 years from now, I'm not going to hold down. I'm not interested in a high yield savings account. That's just me. And usually most high yield savings account, when you look at the financial institution, a lot of them are foreign. And by them being foreign, you just want to make sure that they just don't close their doors on you and you lose all your money. So, yes. But y'all go ahead and throw your last little questions in. I'm going to get out of here on this special Saturday night. Thank y'all for tuning in. Hit that thumbs up button. That helps with the analytics to help you get out to more people. Share it around. Give it a thumbs up if you like the content for the people that are catching this live. Hope I ask you guys and girls questions. I'm about to get out of here. One question. Okay, we got another question. What are you thinking about investing? What do you think about inverse ETFs like Drip, Crush, Let me look at some of these. Inverse ETFs, you're talking about the ones that go up when the market goes down? That's what you mean by I want to make sure we're on the same page because that's what I'm thinking of. Inverse ETFs. Let me look up one of the stock symbols. Give me 1 second. DG. One second. Okay. Do you trade options or futures? Yes, I do occasionally trade options. Oh, yes. Yes, so he said yes. So inverse ETFs are something that if you want to put a little risk into your portfolio, is now the time to buy them. I think it's S. Look into 1 second. One that I've used in the past has been SPXS. SPXS. That is Sierra Papa X-Ray Sierra. The market is at an all-time high. You can buy that thing for $15. If the market falls off, this thing goes up. So I do think it has a portion in your portfolio, but it also is a short-term play and something that you can look into. All right. Now everybody want to come with questions. So I do trade options, never done futures. Looked into it, but never got into futures. Is Ally good to open a savings account? They do have some good rates. I don't know. I like to keep my money in like a couple locations, but if it's a savings account, if it's approved by the FDIC, meaning you're not going to lose your money if the bank get robbed or something like that, make it as long as it's up on that insured amount of like 400,000, and it pays a nice interest rate. Go for it. Bull and bear, yeah. Oh, what's going on? Hey, I see LLJ. What's going on? What's going on? That's old Jenkins right there. D-Rod checking in a little late, bro. I would get with you though. All right, appreciate it. Thanks for checking in. Check out AMRN is about to blow up soon. AMRN. I don't know what that one is, but I'll write it down. I'll give it a little look. SPXS is a inverse. It goes against the S&P 500. It's inverse ETF on that, meaning that when the S&P 500 drops, this goes up. CIT is FDIC insured up to 250,000, but I'm guessing a Roth would be better. I'm 32, trying to save money. The amazing Lucas. We got the amazing Lucas in the building. This is the thing, though, amazing Lucas. Hold on. This is the amazing Lucas? You the one with the YouTube channel? Is this the amazing Lucas YouTube channel? Comment and let me know if that's you. I'm waiting on amazing Lucas to comment to see if this amazing Lucas from the amazing Lucas. Let me see here. 1 second, guys and girls. Oh, that is it. That is the amazing Lucas. CIT's FDIC approved up to 25,000. I'm guessing a Roth would be better. I'm 32, trying to save some money. Yes, FDIC would be. You need to be in a Roth, man. You're 32 years old. Why would you be out there making 0.25? Amazing Lucas, if you are who I think this is, man, you got a big subscriber base, man. You got 450 some thousand subscribers, right? And I'm pretty sure you're making good money from YouTube and whatever else you're doing. You should definitely be investing. You're crazy not to. Right? Now, I think this is the real amazing Lucas. Yeah. So, but yeah, you definitely should be investing, But anyway, SPXS, that's going against the market. I can't even say your name. Is blockchain the end and cryptocurrency the future? I really believe in blockchain technology. Cryptocurrencies, I don't even see the value, man. How can a currency have legitimacy? You know what? I'm going to say this for another episode. It's going to be, what is the US dollar really backed by? He said this is not him logged into his account. He said, no, not him. It's his friend on logged into his account. He said, I told him about your show. Okay. Yeah, tell Amazing Luke I said what's up. I remember watching a couple of his videos. So yeah, tell him I said what's up. He got a great show, whatnot, or whatever the case may be, or whatever. But yeah, Amazing Luke, man, you should be investing. It don't make sense. If you're 32 years old, you're making that type of money. Think about it. Today, the market's at 28,000. I remember 10 years ago, I was like, man, you think it's going to cross 20,000? That's going to be crazy. Now we're talking about 30,000. So, and then my dad was talking about 1,000. So you can't beat them, John. Yeah, tell Amazing Luke I said, what's up, man? But anyway, let's see who we got on here. It's the real Lucas. Okay. I need to start an IRA. I don't know what to buy long term. Jay Biz said he don't know what to buy long term. You want to start off buying the index fund. That's going to be long term. That's what I would thought. SWPPX. Right now it's $48. And yeah. But anyway, I've been on here for over an hour. No, that's what reminded me of. I've been up here over an hour. If you want to start out, I need to start an IRA, a Roth IRA. Yes, you can start a Roth IRA. He said, I want huge gains. I day trade options and it's used to big returns. You got to take that short-term money and turn it into long-term money, right? You got to take short-term money and turn it into long-term money, right? And you got to take because day trading, I've done that. I've traded options, blah, 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 blah. That's good. But you need to be taking that short-term money and investing into long-term things, right? It's almost like a guy who's doing illegal stuff. You're out in the streets and clubs. You're making this fast money. You got to put your money into long-term investments because someday you may get sick. You may not be able to day trade like that. Who knows, whatever the case may be. But you day trade some, it's nothing going to hurt you to turn around and get. I know those are unrealistic returns. To think you're going to get 20, 30% or 100, 200%, every single year. I mean, if you do that, you're in the guise of investing, right? You're talking about the best in the world can't do that consistently year after year. Yeah, they have a crazy year, but if you start to do numbers like that, everybody be running around you. I want huge gains. Is there a way to get more than 12% on? Yes. Yes, I mean, this year has been an amazing year. This year has been a great, probably one of my top years of investing overall. Because what option traders and day traders will do, they'll tell you about their big gains, but they won't tell you about their big losses. 97%, 95% of day traders are losers overall. When you look at what their account started at the beginning of the year, and when you look at what their account is at the end of the year, most of them, if they have a good year, they can't consistently do that. They may have one good year, 2 good years. Like, think about it. That's why I did an episode called Too Smart for a Winning Portfolio. Jay Biz is too smart. He knows so much about option trading and day trading that he will not go in and he will not go in. Like, think about it. Somebody who was just like, I'm about an index fund. Boom. They have 20% right now. In January, somebody who just said, I'm going to just buy some index funds. Boom. They have 20, 25%, 30% overall, right? How many day traders out there can say that? So sometimes the less you know about investing, the better. He said that, yes, you can make over 12% in a Roth IRA. That's crazy. I mean, you're talking about right now, if you just brought if you just brought Microsoft had an amazing year. McDonald's had an amazing year. I mean, Disney, these are companies that everybody know about. I mean, look at AT&T, for God's sakes, the dividends and how it's going up this year. So I want huge gains, day trade options, and I use to big return. Is there a way to get it? Say, I'm doing okay. Trump tweets cost me some stacks. Of course. I know it is. If you could just log in to TD Ameritrade and just start day trading and just start taking money out the stock market, if everybody can do that successfully, that shit would crash. I didn't mean to say that. Right? So, all right. Who is this? Louis Zokoto Lewis says, Mr. Prince, do you know Dr. Boris Watkins? Yes. Yes, I know of him. But Eager, love your show. It's all about passive income, at least for me. That's correct. I appreciate your time. Yep, JBiz, you can do that. Take that day trading money. I'm telling you, if you want to get on, when you look at the winners in the long run, it's always, you got the short-term guys, you got the long-term guys. The long-term guys always win. BLR Radio says, what's a good long-term custodian investment for my newborn? All right. He said, what's a good long-term investment for the newborn? Custodian account. You can start an IRA for your child. You can start an IRA for your child now. You can start a custodian account. Now you're saying, once I have that account, Prince, what's a good thing to buy? You know, first thing I would buy, I won't go, when you buy individual stocks, it's very high risk. You got to start low. You got to play dumb. I'm just stupid and dumb. I'm going to ride with America. I'm just going to ride the wave of America, right? Then once you do that, now you're going to ride the wave of America with an index fund, right? Then you look at, like, for prime example, what is my son like? What does he use all the time? He loves McDonald's. Check. I'm buying McDonald's, right? Google. Check. He loves Google. He loves to get on the computer. He doesn't really know a whole lot about it, how to Google things yet, but I'm slowly teaching him. But Google. I'm on Google. You can Google my name, Prince Dykes. My whole life almost pops up nowadays. I go Google stuff about myself. Now I go Google stuff about myself. Like, man, I need a picture. Let me go Google this. Or what do I do with this? Let me go Google it or whatnot. So Google is taking over the world. Google owns YouTube. I mean, come on. So Google was one. McDonald's was one. I'm trying to think what else is in his portfolio. We had General Motors there for a second. I'm trying to think what else. I know we got some Microsoft. We got some Apple over there. We got some Berkshire Hathaway, right? So, and that's what I would start with. I like things like McDonald's. I like Microsoft. I like Apple. Things that kids are using, things that they could touch. You maybe could look into a Nike. Things like that, things that are going to grow that kids are using. Jay Biz, I'm going to start a Roth next month. Congratulations. He said Vanguard or TD Ameritrade for the Roth. I never personally used Vanguard's platform. I mean, I looked up some stuff on there, but I never invested with them. But a Roth is a Roth, right? It's like, hey, what kind of computer should I get to get on the internet? You get on the computer, we all going and we type in. If we get on the computer, we all go to Google. It don't matter if you're on a MacBook, you're on a Dell, Toshiba, you're on an Apple, you're on a Windows, whatever it is. We all going to get the same thing. Pepsi, Pepsi's cool. Yeah, Pepsi has more growth potential than Coca-Cola. Take that up. Edgar says OY. What is OY? QYLD. It's a great ETF. What is that? Awesome. BLR Radio said he opened up he or she said they opened up a TD Ameritrade custodian account for their daughter. They should now just have to fund it. Fund it. First, start her off with the index funds and enroll her into the DRIP program. DRIP, DRIP, dividend reinvestment plan. Because most index funds pay a dividend, and you want those dividends to pay you every quarter. And instead of paying you, you want them to buy you additional shares. Enroll into the DRIP fund. I have that laid out for you right here on this channel. JB says, right, LOL. I got to think of swim. I got to think of swim already. Just started one over there. DRIP compound interest are nice. Yep. Yes, sir. I brought my son 6 McDonald's shares as a joke for his birthday when he was 6 years old. And it's turned around now. I think he brought like 5 or 6 shares, cost him like $1,000. And now I want to say he got a share and a half just from the dividends over the 2 years, just being reinvested, compounding interest, right? And I'm seeing the fraction of shares make money, so I like that. Now I just have to fund it, right? Yes. So yeah, the people that get out there and try to day trade, Ally, I don't know if Ally even do Ally sell stocks. They do. They did. Ally does sell stock because they came out. Ally Bank is funny. When I saw they came out like announced 0 fees. It's like, come on, man, you so far behind. When Robinhood did it, it was whoa. Robinhood changed the game. Then Charles Schwab kind of came out, and it's like, well, that was a big deal because that was a big boy that was doing it. Then here we go. Next thing you know, Ally, not Ally. Then TD Ameritrade says 0. The ETrade says 0. So we're like, oh man, the big boys did it. Everybody's going to do it. Here comes Ally Bank. Hey, Ally Bank, free. It'll be like me coming out with a cell phone and say, hey, look, you're going to get free nights and weekends with my phone. Like, Can anybody hear me out there? I think it was saying my connection was unstable. Well, it still said I'm live. It still said I'm streaming. So, all right, I guess we're good now. JB says, OLB, that's funny. Yeah, that was funny when Ally Bank came out and said that. So, that was funny. But anyway, that's pretty much it. I'm finna get out of here. Yeah, that was funny. They're like, oh, yeah. Ally Bank is now allowing free trades. It's like, okay. Like coming out, after everybody else did. But anyway, guys and girls and children of all ages, I'm about to get out of here. It was great talking to you guys and girls. It's been an hour and 20. It'll be 2 hours before I know it. Love you guys. He said, thanks for the Q&A. I know you're busy. Yeah, I get around a little bit, but I'm going to get out of here. Thank you guys for tuning in. Don't forget to hit that like, subscribe, share button. Until the next video, podcast, cartoon, or whatever else you see me do crazy around the globe. Peace, be safe. I'm out, and thank you. Thank you, guys. Appreciate it.